Okay, so the first candlestick pattern, well, actually first candlestick, yeah, it's called an inside bar. Let me just put that up. I'll have this recorded for you and send it to you after we're done. Very important to understand these because they are the key. They are the soul of what we do. What we decide to do as far as are we going to be selling or buying? Is the market consolidating? Is it ready to turn around and go in the other direction? It's candlestick patterns. The first one is called an inside bar. So what I do is I look for a candle that, for example, let me see which one. Can't find an inside bar when I need it. Here's an inside bar. Here's the market went down. This is on the 1 hour chart. And then you notice this green candle here? It's inside, the wicks and the body is inside the previous candle. That's called an inside bar. So what I do is that I draw horizontal lines, top and bottom of the previous candle. This is called a mother candle. But you would not know this is a mother candle until this candle closed inside. So, and then I wait till the market either breaks to the bottom or breaks to the upside. And here, the candle closed above the mother candle. Notice that this candle here closed above, the body itself closed above the top of this candle. So you would be entering a long position. 1 second. You would enter long on this candle. Oftentimes is that once this candle is formed, there's a retracement. So you don't really want to get buy up here. You want to wait for the market to come back down so you can enter a trade. Okay? Yeah. Yeah, it's not an easy thing. It's difficult, but you have to understand that the markets, it's not going to run away from you. There's always going to be a buying opportunity. It's hard. It was hard for me but technically you have to wait for a bit of a retracement. Why? Because this candle, you look at this candle and it's like, how many pips is this? Okay, that was, it's not very much, but it's enough to make the market retrace so you can enter a market. And then look what happened. This is so important because these are reversal candlestick patterns, these inside bars, or a continuation, and I'll show you one where there's a continuation. But the body needs to close above this mother candle. Very important. You have a mother candle, inside bar, then wait for a candle to close above or below, and that's your buy or sell trigger. Okay. And oftentimes I like to find these after a long run, after market has gone down a lot or it's gone up a lot, then those are the best trades to take. Okay. So what you need to do for homework is that you need to go back in history and see if you can find inside bars. Here we have an inside bar. The reason you have to do your homework is because if you don't, then it takes so long to find them. Okay, here's an interesting one. We have an inside bar, but the body, and here's the mother candle here, but the body never closed below the inside this mother candle. You see that? See how it tried to penetrate this mother candle here? But it could never, no, and it turned into a false break. So in this case, when we have these candles trying to penetrate the mother candle and they can't, then you buy on the next candle. You always buy on this one because it's called a false break. If the body had closed below the mother candle, then yes, you could have sold it, but it didn't do that. Okay, it turned into a false break. The wick, the body of the candle closed inside this mother candle. Okay, and that these no, because the wick is outside. You see, these are inside bars because the body and the wick. See this one here? The body and the wick is inside this candle, inside this other candle. This is something different. It's called a false break. These are false breaks because the body could never penetrate the support and closed inside, so you would be buying on this candle, and look what happened. Just shot up. Okay. And this is, it's very, if you learn these techniques, if you know your candlestick patterns, then you're going to be able to find so many trading opportunities like here, then it's almost hard to get away from your computer. Because you understand the dynamics now. You understand that the markets, they're either, they sell off, they find support, they turn around, they go north, they find resistance, they sell off, they found support. The market's continually in a hurdle, continually going up and down. And it's your job to recognize these areas of support. Notice here there's a support, false break, false break. So many false breaks. No one wants to commit below this support level. There's no solid bodies committing, so you could only buy at these levels when you see this. Okay. Well, you need to wait for the candle to close. That's the problem. I don't like to place trades until the top of the hour. And the good thing about that is you don't have to come back to your computer until the top of the hour because you don't really have a trade yet. So if you're looking at the market and you see this and you're like, oh, this is interesting. The body never closed below the support. Did it again. Okay. This was a solid a solid red candle at one point, and then it turned around and turned green. You see? So that's why it's important to wait till the top of the hour, because if you took this trade going south, because when it broke it, because it was, you know, at one time was solid candle, you wouldn't know until the body closed if this was going to continue south. And you could have gotten into this trade going south, and all of a sudden, what did it do? It turned against you and went the other way. Only because you didn't wait for the hour candle to close. So you have to definitely wait for the candle to close before you can analyze the market correctly. Okay. So again, inside bar, mother candle, and then you wait and try to break below, and say, it couldn't break below and we got a false break, so we can safely buy it here. Okay, and then the market just took off from there. Okay, and then what did it do? It did it again. You know, we had an inside bar right there. Here's an inside bar, this candle here, and this one. So here's the mother candle, this green candle here. One second, let me just see this candle here. This candle is inside. See the total candle, the wicks and all inside this candle. Because you consider this whole candle from the wick to the body, this is a whole candle. And then this candle is inside it. And so is this one, and so is this one. So you have 1, 2, 3 candles inside this candle. So you have 3 inside candles, and look what happened. This candle was a false break. See how it broke? But it was also a false break on the bottom. So it was a difficult decision to make because there was no direction. But I would take this going south because the market already had gone up. So you're looking for the market to turn around and go south, and it did. Okay. But these over here. Okay, so we have, this is called a tweezer top. These two wicks next to each other. This is completely different. Okay, let's look at it. Okay, first we have tweezer tops. When you have wicks that are equal in length, so you have wick and a wick, that's a tweezer top, and that's a reversal pattern. And we have this one. This is an inside bar because this is a mother candle. Okay, good. Right, so that's an inside bar, and but the tweezer tops alone would have told you that this was going to eventually turn around and go south. So this is an inside bar, and a more conservative approach, if you didn't, let's say we didn't have the tweezer top, we just had this, right? And here's another inside bar, because this is the mother candle. And then this candle tried to penetrate, failed to penetrate, and then finally penetrated. Look, this candle here, the body closed below, and you could have entered a trade here and rode this thing down. See, there was your single. It took like 6 hours, and the reason why, we were in between sessions. I mean, this is, you know, we're in the Tokyo session, which is very low volume, and it wasn't until it broke below the mother candle here. This is the mother candle, and then finally broke it, that you could take this trade going south. Okay. And I tell you, it's just a matter of practicing these over and over and over, and then eventually you get it. Okay, here's tweezer bottoms. These are tweezer bottoms down here. We have tweezer tops, tweezer bottoms. Okay, right there. And tweezer bottoms, tweezer tops, inside bars. That's 3. Okay. Let me see 1 second here. So those are 3 patterns: the inside bar, tweezer top, tweezer bottoms. Okay, let's find some other candlestick patterns. Let's go on this chart, and I'm going to make these bigger, and we're going to look for, this one is called a railroad track, where we have 1 candle down, 1 candle going up. All the losses on this one, all the bulls just push price back up. Okay, causing almost equal in length of the bodies, and that's called a railroad track. So I'll write down RR for railroad track. So that's number 3. Equal in length, the market sold off, and it's important, you have to be looking, where was the market before we saw this? Well, it had been going down. Put in 270 pips, and then we have, so what do? We need to draw horizontal line top and bottom, and then wait for a breakout, and it broke to the upside, and look, it took off. Okay, so that's a railroad track. Okay, the other one is probably familiar with. How did you hear about my trade room? Was it through Walter? Okay. Yeah, 4-hour and daily stuff, right? Right, yeah, I know, me too. I don't, there's only 20 days in a month, and if you have to wait a whole week to get a trade, then it's not fun. Yeah, it can drive you crazy. That's why I started using the hourly, because at least something happens every hour. Okay, here's a exhaustion candle or kangaroo tail right here. Okay, so that's I call it exhaustion candle because I don't understand what a hammer is. I mean, I know what a hammer is, but I can't relate to calling a candle a hammer. I call it an exhaustion candle, and that's what it is. It's exhausted. And so how an exhaustion candle or a kangaroo tail, it's only valid if it's bigger than the previous candle. Very important to understand that. So this candle looks bigger than the previous, probably not by much. Let me see. So that's about 54 pips, and the previous one was about the same, and that's okay as long as this candle is not bigger than this one. Then this kangaroo tail is valid. Okay, so remember that when you're looking for kangaroo tails, make sure, like this one here, not the most prettiest kangaroo tail, but this is a long wick. It's bigger than this candle. So notice that? And then this one, well, ideally you want to find them at previous support and resistance levels. Here, this one here is bigger than this one. All right, and you would sell here, get out there, and notice there's another one here bigger than this one, and you would buy. Okay, let's see if we can find some more. Very important. Where's kangaroo tail? This one didn't work. This exhaustion candle is not bigger than this one, but this one is almost equal in length. But this is a completely different trade setup. This is a false break. Notice the previous support here. This is a previous support, so you draw your line, and then market did not want to penetrate that level, and it closed inside. So this makes it a false break, and you would buy on the next candle. Okay, always false breaks. When you see false breaks on the market, when the body of the candle cannot penetrate the previous support, and I try to do it 3 times, 1, 2, 3, and you would buy at these levels. Okay. So you're going to learn all these candlestick patterns. Here's an inside bar right here. Let's just draw this. And the only way you're going to be able to recognize them immediately is if you practice. Inside bar, went up to the upside, took off north, dipped below. Markets always like to retest the lows or the highs. So it came back to retest the lows and then shot back up again. Okay. Very important to, here's the tweezer tops again. See the wicks are almost equal in length. The market shot up, gave us these tweezer tops, turned around and went south. Okay. So what you're going to do is go over these candlestick patterns. We've got tweezer tops, tweezer bottoms, kangaroo tail, the railroad tracks, the inside bar, and then we have the bullish or bearish engulfing candle, which is essentially covers like 2 or 3 more candles. And like this one here, this is a bearish engulfing candle, and then you would wait for a retracement to sell, maybe up here, and it went down 108 pips. So these candles here, notice that it covered one candle. This whole candle here basically was covering, engulfed all of these candles going south. So we have engulfing candles, bearish or bullish. We have railroad tracks, tweezer tops, tweezer bottoms, kangaroo tails, inside bar. Essentially, that's all you need. Okay? If you understand that and can go back and find them, And then what we're going to do, put it together with the color-coded system, which that's something I came up with, which is basically you have two or more candles in the same color, like here, 1, 2 green, 3 green candles, right? Followed by a color change candle, and then you draw a horizontal line at the close of that candle, which is 127.22, and you would place a trade 8 pips below that. That's the color-coded 1 hour scalp system. And then you would see this trade. There it is. Okay. And I like to find these trade setups at previous resistance or support. And right here, this level here was a resistance from all the way from back here. Okay, that's what happened. You were in the trade room today. We were looking at here the USD. Remember the USD Swiss sell from last night? Okay, I had some people in the trade room telling me, well, there's not much room to go down. I said, well, look at the 4 hour chart. We had a color change candle at a previous resistance from all the way back in March 13th, 14th. So we took that trade last night going south, made 20 pips, but I made the mistake of thinking that it was going to turn around at 95 and head north, and it didn't. We lost 14 pips off of that trade. But this trade here was a great setup. We had a color change candle. We had a false break at a previous resistance, and the market went down. Okay, and that's the same thing what we see here. We had a previous, that's not a good color. Let me change it so you can see it better. You know, this was a previous resistance, and market has memory. And what it came back up here, gave us a false, this was a false break candle right here, went down, came back up to retest the resistance level and gave us a color change candle, and the market went down. Okay, it becomes very easy once you can practice, once you know all your candlestick patterns, and you know that to look for them, like here at previous resistance level. If you would have practiced this a lot, then you would have seen what I've seen and taken the trade without even thinking. You would have seen, oh, this is a previous resistance. We have a color change candle and it's a false break. I'm going to sell. Okay, and look, that was 78 pips, but it went down. So always price is fluctuating between support, like here, false break, you buy, resistance, false break, you sell. Okay. Those are really the only areas that are ideal, that are high probability trade setups. Here we had a previous resistance, price came back up. What did it do? It just shot down from there. Okay. So we're always looking for where the support, where the resistance level, and if there are no resistance or support, then just stay out of the market. Yeah, I'll go to, this is a 4 hour chart. I'll go to the daily chart and I'm looking, okay, not only was this a resistance on the 4 hour chart, it was also resistance on the daily chart on this USD Swiss. That's how come it shot down so much. Okay, because the logic behind this is that why would anybody, if you were long, if you let's say you bought it down here and you're still in this trade, why would you stay in past these levels when it's obviously that these levels were rejected twice? No one is interested in staying in, so they bail. They jump out and look what happens. Okay. So here was a support, here was a resistance that turned support. The resistance is broken, it becomes support. And then here was a false break. And then, but here was the resistance up here. So you have support and you have resistance, and that's all you really need to know in Forex, because the markets are always going to be respecting these support levels like down here, or resistance, unless there's a catastrophic news event or a really high impact news event that'll break a support resistance. But if you were short from all the way up here, we had 1, 2 green candles followed by a color change candle, and then you would place a trade 8 pips below here. And then this is a daily chart, so it's 1, 2, 3, 4, 5, 6, 7, 8, 9 days, and you were short up here. You would want to get out of that trade down here because the market's already put in so many pips and it's hitting a previous support. And then you want to be thinking of buying down here because this is a support level. But you need a candlestick pattern, and we had this. You can't see it because you have the perforated 24-hour line, but this is a kangaroo tail right there. Are you talking about this? Well, they are tweezer tops, but the candle before that is a kangaroo tail. Let me take away the 24-hour separator so you can see it clearly. See this here? This is not only a false break, but it's a kangaroo tail, and the kangaroo tail is a reversal pattern. So yes, these are tweezer tops, but look what happened before. This was more important, and the market turned around. Yes, it did respect it for a couple of days, but eventually it turned around and went north because it could not go below here. It wouldn't go above here for a couple of days, which is true right there, but eventually it broke it and it took off. It was not going to go below these levels anymore. Why? Because it already had sold off so much. Why would it want to go any lower after this huge rundown at a previous support level? And here, yeah, it met resistance, it's true, because it was a strong resistance, but what happened eventually, it turned around and went north. It didn't go below these levels. Okay. Yeah, I use the daily and the 4-hour chart to look for key support and resistance levels. And then I use the 1-hour chart to tell me where to get in. Okay, and so these levels, this was a great trade. It's difficult to find these. It's rare on a daily chart. When you see something like this at a previous support, to just take the trade and forget about it because this run was pretty much over. And I know in hindsight it looks great. While you're in the trade, it's more difficult. Okay, but you have to. But you will learn when you see hammers or exhaustion candles on a daily chart. You should be able to get at least a week or two of the market going in the opposite direction. And here, it did that. It went up for a whole month. Okay. Well, the thing is that once you've been doing, what you do is you use a stop loss, proper stop loss, and you know that a kangaroo tail or a hammer like this is a reversal candle. Now, if you saw 1,000 of these, and let's say you've been trading 10 years, and you saw 1,000 of these, you're going to be able to sleep well at night because you've seen it so many times. Okay. And this candle, notice it's bigger than the previous candle. That's important. This whole candle with the wick is a kangaroo tail, and it's bigger than this candle, and that's what you needed. If this candle was bigger, then no, this hammer or kangaroo tail would not be valid. But it was twice as big than the previous candle, so this is important. This one here, this one is bigger than this one, you see? So look what the market did. It turned around and went south. Okay. It is because it's not, number one, where is it? It's at a previous resistance. Number one. So I'm always looking for 3 or 4 reasons to take a trade. Why would I sell it up here? Well, there's a resistance up here. The market sold off at 93.69 for about a week. And then what did it do? It found support and went back up to the same level and gave us a color change candle. And it gave us this false break. See how the market tried to penetrate the previous resistance, but failed and closed inside. And then gave us a red candle. So it was screaming to sell. Okay. At these levels. And you could only become confident in these setups after seeing hundreds of them. So from now on, you need to go back in history and just send screenshots of what you see and why. Okay, this is a color change candle after a long run, and where here? These are tweezer tops, right? And railroad tracks. Down here we have a color change candle because we have 1, 2, 3 red candles followed by a green candle, and all you need is the price to shoot up 8 pips above this candle, and it did, and look, took off north. This one here, yeah, it is because it's covering about 2 candles. So this is a bullish engulfing. So there's many reasons. You have bullish engulfing, you have inside bar here, you have, let's look at, isolate the inside bar. This is an inside bar because this candle is bigger, this candle's inside. You have a color change candle. So you've got like 3 or 4 reasons why you should buy. You have color change candle, you have inside bar, you have bullish engulfing, a lot of reasons to buy. Okay? And the market went up for 2 weeks. These really work well on a daily and 4-hour chart, these candlestick patterns. Because if you're, I trade off the 1-hour chart, but I'm always looking for setups like this to stay in 3 or 4 days. If I don't stay in 3 or 4 days, at least I know that I want to always take a trade going north. So when it comes back down, I buy it. Comes back down again, I buy it. Okay, because of this setup. Okay. So what we're going to do is you're going to go back in history and just on several pairs and start looking for setups. Okay. Once and you have to, like here, this candle here was bigger than this one, right? So this exhaustion candle, it was also a false break, so you would sell. The market went down. Okay. And here we have a color change candle where we have 1, 2 green candles followed by a color change candle, and then you would place a trade 8 pips below the close of this red candle, and the market went down. This one here, no, because this one's bigger, but we have a color change candle. Okay, so you don't have to worry about if this is an exhaustion candle. It doesn't matter because this candle is a color change candle, and you would sell when it goes lower. And then here, what do we have? We have tweezer bottoms. Okay, and it never went below these levels, and it turned around and went up. Okay, and then here, it was respecting the support level from here, and it was an exhaustion candle, turned around and went north. Okay, so what I want you to do, and I'm going to send you a video of stuff that you need to cover, but what I want you to do is to go over this every day, and you don't need to spend a lot of time, just 10 minutes a day, just going back in history. Pick another pair. This is Canadian yen. Okay, look at the support that's going on right now. You see this level of support? Right now, we should be buying because we've got a false break here. We had a false break up here. We sold this last night. Remember, were you in the trade room last night? We sold here. We sold Canadian yen right there. And we made 40 pips. And then, but we had to get out because this is a strong support level and it's respecting these levels. So this is a good buying opportunity, but you have to get out once it gets up here. So here's a Kangaroo Tail. Here's a false break. So this is a great place to buy right now. Okay, so this is what you need to do. You need to just go back in history and first look, okay, how many pips did the market put in before I saw this? Okay, this thing went down. This is on a 1 hour chart. And we have 1, 2, 3, 4 red candles followed by a color change candle. And this is Monday sell-off, turnaround Tuesday. So this is a turnaround Tuesday trade. And you can confirm it by the color change candle. Long wick, doesn't matter, is a color change. And you place... Right, exactly. This is the London session. This is noon Eastern. This is the time to reverse positions. And that was a nice trade. Okay. So what I want you to do is just go back in history and turn this into a game and see how many setups and explain it why. Here we have 1, 2, 3 green candles followed by a color change candle. And you place a trade 8 pips below this one. And there's your trade. Okay. So it's also railroad tracks. 2 candles side by side, almost equal in length in the bodies. Okay. So you absolutely need to know all your candlestick patterns if you want to trade Forex. And you need to review them on a daily basis. And I only review like 10 minutes just to keep the knowledge fresh. And I go back and I try to find, why is this turning around? Well, we have a color change candle, so there's a sell-off there. Okay. And then it's over and it turns around and goes the other way. But you can capture 10, 20, 30, 40, 50 pips at any given time if you're looking at a lot of different pairs. And yeah, you can do it on a Forex tester, definitely. You know, here the reason I had a buy on today on the Euro Yen is because here's an engulfing bullish candle, and we have divergence. This is a 4 hour chart, so I'm still in this trade and exiting at 121.50, 70 area, right there. Okay, that's why I recommended this buy trade, even though it went up too much and we had to wait for a retracement. I'm down only 20 pips on this trade, but I'm going to stay in. Yeah, and the thing is that you can wait. The bad thing is tomorrow is a holiday and it just may not do anything till Monday. But it's okay because it doesn't matter. This is a clear technical trade setup. Look, we have divergence on this CCI indicator. And we have a bullish engulfing candle, and I did even mention that I would hope that it would retrace so I can buy it down here, because this is clear support, a very clear divergence which should take off north from here. Okay, now, and you'll find yourself, if you practice a lot, practice all your candlestick patterns, know them by heart, then you're going to have a lot of confidence, and when you see the market turn against you 30, 40 pips, 50 pips, you're not going to be worried because you see the big picture. You understand that the market, it's very clear. Just to give you an idea, you see a color change candle here, right? And this technically is a sell, but look what happened before it went down. It shot up. You notice that? Thing went up 40 pips before it turned around and went south. Now, if you didn't know your candlestick patterns and you didn't know how to trade the color system, you would have gotten out of this trade because you thought it was going to go up. Okay, because it did. It went all the way up to here before it turned around and went south. But I saw this as just a retracement trying to retest the highs before it collapses. And that's what happened yesterday on the Canadian yen on this trade. We had a sell here. We got in. Here's a color change candle when we got in down here. But look what happened. This candle shot up. And I had some people emailing me telling me they were thinking of getting out of this trade because they saw this candle go up. And I said, no, don't do that. This is just, it's going to retest the highs, and it did. And then what did it do? It turned around and we made money. One guy actually did get out of his position because he thought it was going to go against us. And he says, you have to understand the markets are always in waves. It's not going to go down in a straight line. It's not going to go up in a straight line. This trade was qualified. It went 8 pips below the body of this candle, and you need to give it breathing room. Of course it's going to retest the highs, and it did, but then it turned around and went south. Okay. Oh, that's awesome. That's pretty cool. Okay. So just do that. Just go back in history and try to count your candles here. 1, 2, 3, 4 red candles followed by a green candle. And you place a trade 8 pips above that candle. Here's the close. The body of the was 92.38. So your entry would have been 92.46. And 8 pips above, and there's your trade. Okay. Here's a false break. What was it? Here? Was it the right here? No, because this candle is smaller than this one. Okay. Now this one is an exhaustion candle because it's bigger than this one. See that? This whole candle with the wick bigger than this one. It's also a false break because we had resistance and price tried to penetrate the resistance and failed, and you would sell. Okay? And I'll guarantee you, if you just practice this every day just for 10 minutes, you don't want to spend a lot of time on this. You just want to have fun with it. And I don't spend more than 10 or 15 trying to find these setups. And what will happen eventually is that they're gonna, when you go back to a chart, you'll be able to recognize them. Right now, this is a buying opportunity. Right now, on Canadian yen, you should be buying it right now because it's a false break after a long run down. Stop loss is below here. And then this is support, support, support. See all the support down here? So that's a buying. It may take a few hours to get up there, and it may just stall out because there's not going to be much volume tonight or tomorrow. So, but eventually it will, you know, by next Monday it should take off. Okay. So any questions? You don't have to worry. We're going to be going over this over and over. Okay. We're going to always refer back to the candlestick patterns. We're going to add more things to this, but we're always going to go over this time and again until you eventually get it. You're going to understand what an exhaustion candle is. You're going to know what a color change candle is. You're going to know what tweezer bottom, tweezer tops. And you absolutely need to be looking at least 4 or 5 days of activity, like here. This is all 2 weeks, so you can see all the support and resistance levels. And then you place trades at these levels. Right now this is a support level, so we would be looking to buy around here, around these levels. Mm-hmm. Right. Yeah, they are, because there's so many orders at those levels. A lot of institutional traders don't want the market to go any higher, so they place a lot of sell orders up here, like here. There's a lot of standing orders already are there to push price down because they don't want price to go up any higher. And then all the dumb traders think the market's going to keep going up, and they keep buying, and then what happens? Turns around and goes the other way. So you definitely have to be looking at least 1 or 2 weeks of activity, because that's so much data that you need to be able to make a decision on whether you want to buy or sell. So you want to be buying down at these levels, and you want to be selling at these levels. And that's it. Okay. So any other questions? We're going to get into a lot of stuff, but you have to understand support and resistance, and you have to understand your candlesticks, because that's really the heart and soul of trading. Okay. If you understand that, you don't need to understand really anything else. All the other things that you learn is going to support what you see in the candlesticks, and that's it. Right. Right. It just takes practice. You'll get it. Okay. I've been teaching 11 years and over 500 students, and the ones that lose are the ones that don't pay attention, that they don't follow the mythologies. They want to go off on their own. And there's been a lot of successful traders that have made so much money. Some of them are even trading professionally for hedge funds and things like that. So the thing is, it's not really difficult. It's just putting your attention on something and repeating it and just watching the same process over and over, because the prices, Forex has memory, charts have memory, and here, obviously, the color-coded system is mine. I developed it. But a lot of this support and resistance, it's been around for a long time. Everybody, professional traders know how to trade on support and resistance and candlestick patterns. But the 1 hour scalp system I did develop. Like here, we have 5 red candles followed by a red candle, green candle, then you would buy. Okay, and so that I did develop, and you will incorporate that with your candlestick patterns. Okay, so the next lesson, this weekend I'll have free time, so I'm gonna put videos together, but tomorrow's not a good day. So we can start up, you have a lot of homework to do, because you've got the candlestick patterns to do. Take screenshots and send me as much as you can. Always ask me a lot of questions, ton of questions, as much as you can. Do that. Always Skype me, or you can email me and see, I see this setup, what's going on. And this is the value of the mentorship program, because it's not really, it doesn't end really. Right, you need that. I mean, I used to take courses, but then I was left alone after 3 days, and I was like, okay, I forgot everything I learned, and I just spent $1,000 on a course, and it's Monday morning and I don't know what to do. That was frustrating, and I realized that you cannot teach that way. You cannot go to a crash course on Forex and become a professional trader. It's not going to work. It's like being in a dark room, and then the janitor turns on the light, and it's like you're not in a dark room anymore. Right, right, right. Yeah, and the thing is, you got to transcend that. It's like you're going to have losses. I have a string of losses, but I don't care, because I know I'm going to make up the losses and I'll make more money. And that's how you have to look at it. You absolutely, when you have a loss, you treat it as a loss, forget about it, and move on, no big deal. Because if you get caught up in losses and you get caught up in losing money, then you can't trade. because the losses are just part of it. I have losses all the time. I don't really care. Doesn't matter anything to me, because I know that in general, overall, at the end of the month, I'm going to be up in my account. Okay, because I know how to trade. If I have losses, it happens. It's because, you know, a trade that I took didn't work out. Like this trade right now in the USD yen, it's very close to the to the stop loss. So it may get, I might get taken out, but I'm okay with it because this was a good solid trade setup based on technicals, right? The same thing on this Aussie. I mean, I took it going short because it broke a resistance, a support, but it turned around and went north. So I'm only down 10 pips on this trade. I'm okay with that. All right. And then the euro dollar, it turned against us. I mean, I was up 40 pips and I should have gotten out and went up. But I'm all right. You know, I didn't lose a lot on any of these trades, and made money on USD Swiss, made money on Canadian yen. So it wasn't the best day of trading, and we're still in this one, and this one's going to go up. But you know, the losses are minimal, and we can make up the losses. You're not going to have, you know, gains all the time. It's just it's difficult to have. Yeah. Yeah, you'll get away from that, because what you're going to do is, believe me, it happens to all of us, because we want to make a lot of money, but it's a dangerous game if you play it that way. So what you do to get away from that is just don't worry about the money. You're going to make money. Just focus on the technicals, on the trade setups, and you'll be fine. But if you focus on the money, then yeah, then you get overshadowed by the money. And it's like the guy who placed a trade. It's very typical. Places a trade, and he said, "Wow, I just made 100 pips." And he thinks, "Wow, what if I had doubled the contract? I would have made twice as much." So the next time he doubles the contract, and he loses 100 pips. Okay, so it's not that's gambling. It's not trading anymore. So you just always want to be careful, because at any trade that you take, it's high probability, but it's still a probability. It's not 100%. But overall, you should be okay. Yeah, no, but overall, you should be okay. You should have 80% winners, and you have a few losses, and the 20% losers are not a big deal. Okay, it's just part of trading. So and I don't really look at pips. I look at wins versus losses. Did I have 20 gains? Did I have 20 wins today? Maybe 5 losses? Okay, that's what's more important to me, because that means the techniques that I'm using are good. Okay, but we'll start up again next.